Hey, it's Clay, and this will be a video chart on ticker symbol FCEL. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to this time frame that does a good job of telling the quote-unquote story of the price and then makes mapping out where levels of support and resistance a bit easier to see. Done this analysis several times in the past, so that's where these green line annotations are coming from. But after today's price movement, definitely some updates here need to be made as the price finally broke to the downside of this long time channel that it had been formed in. So first thing I'm going to do is actually just get rid of that line there. Yeah, that level pertains, just not relevant right now. And from a presentation point of view, I don't want to risk causing clutter and confusion because there's lines everywhere. So let's try to keep this as clean as possible. The first update that needs to be done, though, comes about based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So going forward now, 35 cents is going to be that key level of resistance, which is actually already played out. If you look at the bounce right here, you can see that that is right where the price ultimately got rejected from before getting pushed back to the downside. So I'm not saying 35 cents can't be broken. I'm just saying it makes sense why the price ultimately did get rejected up to that level. And that'll definitely remain, kind of public enemy number one in the near term if there is any sort of bounce that's going to, play out into something bigger. If the price can push up through 35 cents, the next key level after that would be that purple line right there, the 50-period moving average, which you can see now also is, getting a track record of knocking down the price. However, one hurdle at a time, and that first hurdle being that 35-cent mark right there. As far as areas of support are concerned, nothing really new here to report. I've talked about this green line here in the past, right around the 33.5-cent mark. And you can see that is where on two separate occasions today, the price bounced right off from that level. So that is certainly the level that you would want to see continue to hold. If the price does not hold above there, the next key overall level of support at that point in time would be down there around the 32-cent mark. So keep an eye on 32 cents if this current level does not quite hold up. But like I said, so far so good. 2 times it was tested and 2 times it passed and held as support. So we'll see how this one continues to play out going forward. But yeah, all in all, no doubt about it. A bearish breakdown of the pattern this morning. Now it's a matter of, is this a much bigger breakdown that's going to play out? Or is this just kind of one of these faulty breaks down where the price will quickly be back upside in that range, up above 35 cents? We'll have to see what happens. Good news is still 3 days left this week. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.